that you were selling all of your gold for Bitcoin and Ethereum. So what was the rationale to be, I guess, getting out of gold and getting into Bitcoin?
Well, look, I'm a simple macro guy. I distill everything down to the simplest possible thing. I look at the chart of Bitcoin versus every single asset, and it's breaking out versus every single asset. So what it suggested to me that Bitcoin is the single most dominant trade I've literally ever seen in my entire career. So if it's that, I'm a macro guy, I'm not running a diversified portfolio, I'm not a pension fund, I'm a macro guy. When a bet looks so dominant and so large and so powerful, owning any other asset only dilutes that. And if I'm comfortable with that bet and I can structure it that I can take the risk that I want to take, then I want to put everything I can into it. And that I've never done before. I mean, I've had some big bets in the past. I had a big bet in bonds last year, it paid off. And I've had a few of these kind of bets, but nothing like this where I've gone, there is almost no point doing anything else, which frustrates people. They're like, Raoul, you're a macro guy. Talk to me about, the Russian stock market. I'm like, I don't care. Right? There's no point. This is so dominant. And that will change. Emerging markets is on my horizon as one of these great trades because Bitcoin trades in cycles and the emerging market cycle is going to be phenomenal. But right now, it's eating the world.
We have all these big investors coming in, this institutional money's coming in, and that Bitcoin, the market has fundamentally changed. And I feel like every time that you start hearing people saying, well, things have changed, it's different this time, right? It's one of those situations where, well, is it really different this time? So, I mean, what do you think when you hear this kind of sentiment being pushed around that this time is different because we do have this big money coming in, there won't be some dramatic bear market and stuff?
It's, I think, gigantically different. Firstly, look at the acceleration of this post-halving versus the previous one. It's faster, which none of us expected, right? We were all expecting the slope to be less. So far, not true. Now, that's just, it's early days. So that's interesting to me. Also, the structure of the market before was retail investors. Now, here we've got institutions, some of them will buy and hold, but as you bring in hedge funds, you'll start bringing in new supply into the market because they trade it more and they'll trade it in big size. So they'll be selling some, buying it back, selling some, getting short. That's a different structure than we used to. What that actually does is lower the volatility of Bitcoin over time. So the texture and feel of Bitcoin will be different. Over time, the next cycle, the returns will be significantly lower in terms of percentage returns. This one, I have a hunch that this will be bigger than anybody imagines. Everyone's like, well, plan B, he's got 250,000 or 280,000. Others have got various levels between 50 and 150. But if I just take the log chart, put regression lines on it, if it gets to 2 standard deviations overbought, which is roughly where it got to the last 2 peaks, that's $1 million. When you're forcing an elephant into the bathtub, things are going to change, right? And that's what we're doing here. We've got no supply, and we've got this kind of industrial vacuum cleaner of Bitcoin coming in, which is the institutional space. But it will structurally change it. We will see weird things like quarter-end markups or markdowns. We will see rebalancing. We will see all of these things that we've not seen before because it's not been a feature of the retail investor. So the structure of the market is changing, but I have a feeling that this is going to be a little more shocking than people imagine.
You've got this incredible window into the world of these big money investors, right? You're on a first name basis with some, really incredible big money investors. So what are these guys saying behind closed doors about Bitcoin? I know we've had some big announcements this year from Paul Tudor Jones and stuff, but what are they kind of saying, behind closed doors? What are they kind of thinking about Bitcoin right now?
Well, the dirty secret is most of these guys held it in their own PA accounts. Because they can see it, right? They just weren't able to put it in their funds. The structure wasn't there. The futures, that helps. But some of them want to physically store it. They want a custody. They want it in their prime broking accounts, and it doesn't yet fit in. But that's changing. So they are all working on it. I'm also hearing incredible stories of these massive hedge fund platforms trying to buy every single independent crypto hedge fund to add it to
Wow.
their platforms. So that's new news that is big that I'm picking up from everybody, is that you saw the announcement from Alan Howard, who's a friend of mine and one of the most famous hedge fund managers in the world. I mean, he's just, invested in that platform. He's been in Bitcoin for a long time, and that's not the only announcement. I mean, so we're going to see this everywhere, and my guess is we'll see it from Millennium, we'll see it from Balyasny and all of these big hedge fund platforms that they're going into the space. Again, that will mean most of these funds are small. They're like $20 million funds. Mm-hmm. And suddenly they're going to be $200 million funds. And then their impact, it's the structure of the market is going to change with all of this, but it's very exciting.
Absolutely very exciting. It's this tsunami of money is coming in, right? And it's
the wall of money. I keep telling everybody. I've seen this before.
To what extent are you seeing investors taking an interest in crypto assets beyond Bitcoin? Are we seeing these big money guys start to talk about Ethereum, for example, as well?
Well, the Ethereum futures launch on the CME, that's a big deal. Most people that come from the macro space that I'm involved in understand the Bitcoin narrative, and then they want to understand further out on the risk curve. That's how we all do this. I'm going to write some tweet thread about this at some point, about people just don't understand risk curves. So what happens is you have three preferences: liquidity preference, time preference, and then risk preference. So liquidity is US dollar or US treasuries, where you get the ultimate liquidity. That's your safe haven. Time preference is when you have some good enough understanding of an asset that you can hold on for it for a period of time. It's not a trading asset, but investable asset. Then you have the risk curve. And what happens is, usually once you've made the decision, let's say I want to buy the Goldman Sachs Commodities Index, you then start saying, how can I make alpha now? And you start looking further out the risk curve. Do I want to add a further weight to wheat or copper or whatever it may be? In this case, Bitcoin is the gateway drug to new sources of alpha. The new sources of alpha are Ethereum and the entire digital asset space. And these guys will not stay just in Bitcoin. I know the Bitcoin maximalists don't like that narrative, but it's not all about the reserve asset, the pristine collateral that I've talked about. It's actually they want an ownership of a new space, and they understand probabilistic analysis and understand what kind of risks they want to take. Ethereum is the next one, and my guess it is much less liquid than Bitcoin, and I have a feeling that Ethereum will massively outperform Bitcoin in this.